let me call upon Sharon to make a presentation. Now, Sharon is the research coordinator of the Department of Financial Intelligence at UNISA, University of South Africa. She was previously appointed as the head of tax technical and research at the South African Institute of Tax Practitioners, where she was primarily responsible to liaise with SARS, National Treasury, Parliament, and international organizations on tax. So she comes with a very rich background, and she brings to bear some of that background to her research and what she's presenting this morning. So Sharon, please take your floor. Thank you.
Thank you, Dennis. Good morning, everybody. I hope you're going to enjoy your tea during this break. Sorry for being so rushed. I've been told I've got to rush through this so I don't keep you back from lunch as well. As you can see, my topic is about specifically SMEs and entrepreneurs. It's my passion. It's where my research has been. Lots of friends, families, and I've just seen how small businesses have been struggling. And if we go back to just to give you some perspective about where we are from a South African perspective, and I feel a bit out here. Usually we have a lot of people here from South Africa, but now we've got a lot of other African countries here, not South Africa. So I'm quite proud to be representing South Africa at this really great conference. Just to give you some statistics about our country, we have a chronic unemployment rate at this stage sitting at 26%. It's actually closer to 27%. But what's scarier than that is that our youth unemployment is sitting at 52%. If we look at the entrepreneurship, our entrepreneurship intentions, that's the belief that individuals can start a business within the next 3 years, it's gone down. And we are now behind you guys, our African counterparts, which is scary because we were the leaders. If we look at the challenges that our small businesses are facing, and this is not new, this is across the world, if it's developed or developing countries. I mean, I was in Australia the other day. They're all facing similar challenges. It's not different because they're a developed country. One of them is funding, access to markets, labor laws. Specifically in South Africa at the moment, we have crime, which increases their spending costs on security. We have low investor rates or investor contributions coming into our country. We have a lack of skills. And what I'm going to be focusing on today, which is generally the focus of this topic, is the regulatory compliance burden, specifically in relation to taxation and red tape. Now, the South African government is not oblivious to all these problems that our small businesses are having. In fact, they've actually done some wonderful stuff. They've integrated our small business development strategy. They actually formed a small business ministry. So our small business was all over the show. It was by the Department of Trade and Industry. It was by the finance section. It was all over. There wasn't a coordinated approach. So they've now combined or ensured coherence from both a policy and a planning perspective so that we can get an enabling ecosystem for our small businesses. I'm not going to talk too much about the ministry itself, other than the fact that it's been 2 years down the line and they still haven't come up with a small business definition. But be that as it may, they have done some good things, and that is increased financial support, which you'll see is the number one challenge facing these small businesses. They've introduced a lot of agencies to assist these businesses, such as the Small Enterprise Development Agency, the Small Enterprise Finance Agency, the National Youth Development Agency, which assists individuals between the ages of 14 and 35 to actually start and finance their own businesses. We have the Technology Innovation Association or agency that enhances the global competitiveness or helps South African businesses, small businesses, become globally competitive. And we have the National Empowerment Fund. And that was put there because of our apartheid legacy to help the previously disadvantaged individuals start their own businesses and run their businesses successfully. Now, on that particular point, we in South Africa have what we've called broad-based black economic empowerment. And those are a code of rules that all businesses at this stage, each sector has different rules, but the basic rules is 5 rules, 5 criteria against which these businesses are measured. If you comply with these, or if you have a high score, there's a ranking. If you have a high score, that means your small business or your business, it doesn't have to be small, it's also targeting the larger businesses, gets certain points. The higher your points, what are the benefits? Well, you get more business, specifically on the SME side, from larger businesses, and you can transact now with government. And I've had a few interviews because now I'm moving into the entrepreneurial space as well, because we really are falling behind from a South African perspective on that. Our youth are just not entrepreneurial. So I'm trying to work with the schools and universities to get this entrepreneurial spirit. Some say you can't develop it, but at least we can nudge it in the right direction. So what we've got here is that in terms of these codes, all businesses, for instance, my university, we have over 40,000 students across the world, mainly in South Africa and Africa, but we also have other international students, and we are required to assist our small business suppliers. And to do that, it's going to cost us money, but if we do that, we get more points. If we get more points, we get tax benefits and we get more work. So we physically have to mentor, we have to train our suppliers, because the rationale behind this is if the suppliers are beneficial or better off, we are better off. And I've had some fantastic interviews, and if there's one thing, I don't think the BE codes are working the way they should. I think it's enhancing a few individuals so that they are getting rich. But if there's one thing that's good about this BE code is this Enterprise Supplier Development Program. The results, it's this mentorship, and it's working together, and it's working very, very well. But be that as it may, today I'm going to be focusing on the regulatory constraints. Our government has tried to help the small businesses, specifically from a tax perspective, and they've introduced a number of incentives to actually help these small businesses. So if we look at the tax system, in order to be compliant with the tax system, you have to incur certain costs. And that works both ways. It works both from a revenue perspective as well as from a taxpayer perspective. So the revenue authority costs is the administrative costs, and the taxpayer's costs we call the tax compliance costs. Now, from a tax perspective or revenue authority's perspective, in terms of the four canons of a good tax system, a revenue authority has to administer the taxes effectively and efficiently. Now, our revenue authority has taken that on board, and they've said they want to improve the ease and fairness of transacting with taxpayers. They want to make it easier for taxpayers to transact with them. In light of that, the taxpayers also have costs to transact with the revenue authority, and those are compliance costs. Now, where is that right to reduced tax compliance costs entrenched? Well, generally, in most countries, you have a taxpayer bill of rights, and that is enforceable. It's an enforceable document. Where the right to have tax compliance costs taken into account in the tax administration process is legally enforceable. However, in South Africa, we do not have a taxpayer bill of rights. What we do have actually, or had, was a SARS service charter, South African Revenue Service Service Charter, which highlighted both the responsibilities and obligations and rights of the taxpayers. It told us SARS could answer your calls within so many minutes, you'd have an objection within so many days, blah, blah, blah. You have a right to professional services, to correct answers, but it was not enforceable. And in fact, it appeared in 2015 and disappeared, like literally taken off their website and no longer available or enforceable at all in 2014. And funny enough, it only reappeared because we've had a change in commissioner, or sort of we've got an acting commissioner at this stage. I don't know if you're following our saga, but it reappeared last week. So we have some hope. But in that period between 2005 and 2014, taxpayers had to rely on the Constitution, and the Bill of Rights allowed, in that case, the right to just administrative action. Now, if you can think the costs of going to court to entrench your rights to efficient tax compliance, no small business can afford that. Going to a constitutional court to get your taxpayer costs reduced. It's just not going to happen. But luckily, we do have now a new service charter. We have an acting commissioner, and hopefully it is going to go a lot better. So where do we stand? What do we know? Well, what we do know at this stage is SARS has published, it's publicly available, their costs to collect the revenue in our country. At the moment, they're saying it's 1% of the total tax revenue that they collect, and that seems to be well within international norms. In fact, they even want to reduce this to below 1%. And I was at a meeting the other day where they released these statistics, because I'm not quite sure how they calculate these operating costs. I don't know what they include or exclude. And I asked them, how did they actually achieve this? The answers were mainly e-filing, which is the electronic submission of your tax returns, the electronic payment of your returns, and just getting cohesion within the Revenue Department itself. However, what we've been finding, and what I've been hearing specifically from the Chartered Accountants and all the tax professional institutes, is that the taxpayers, and particularly the SMEs, and to a large extent now the large corporates as well, which never featured in this compliance cost survey, is that they feel that the Revenue Authority is starting to push their costs of collecting this revenue onto them. So things that they used to do before, like checking the reconciliations, they're now requiring the taxpayers to do it, and they just check it. And they're saying this is not fair. So what we know is we know the administrative cost for the Revenue Authority is 1%, but we don't know what it is now costing the taxpayers to actually comply. Now, your question might be, who cares? They've got to comply. That's just the way it is. But it's important that we know. Now, why? Well, first of all, we have to, tax compliance costs diminish business resources. That's number one. And to recover these costs, there's no corresponding income coming in anywhere. And these costs also reduce entrepreneurship. And that's what we in dire need of South Africa. We need more entrepreneurs. And now you saw, to start a business, nobody wants to start a business. It's just too difficult. And it's also, these costs are passed on to either the individuals in the form of lower salaries, less investment into South Africa, or higher prices on particular products. It also, tax compliance cost studies also help assess the efficiency of a tax regime. And that's, again, one of the canons of a good tax system. If it's not efficient, it's going to be, it highlights the complexities. And that's very important. And this is what this research has done, is what is making this tax compliance so complex. And last of all, but I think for me the most important of all, is it has been shown that these tax compliance costs affect the behavior of taxpayers. And a lot of us have been talking about it today. We're looking at the Revenue Authority side, but what about the taxpayers side? How does their behavior change if there are high tax compliance costs? And what we have found is that if there are high tax compliance costs, it can lead to tax evasion and vice versa. Okay. So what have we done? We've now gone and measured tax compliance costs. Now, what are these tax compliance costs? Well, they consist of three broad elements, and I'm not going to go into the detail. But we have internal compliance costs. So that's the cost in the SME of a person actually filling in the tax return, calculating the tax, paying the tax, etc. It also consists of your external costs, which are your advisor's costs. And a lot of the SMEs can't do it themselves. They're saying it's too difficult, too complex. They have to get the help of a tax practitioner or tax advisor to assist them, or an accountant. And that costs money. And then you get your incidental costs. It's like your stationery, your training, your software. Things that I haven't included here are the psychological costs. When I did this survey, I was fortunate to eventually get the help of our Revenue Authority. And when it was sent out by them, because I was not allowed to send it out myself, they had access to the taxpayer population. A lot of the people phoned me and said, I'm sorry, I haven't done the survey. Are there penalties? Are there interests? I will do it. I promise I'm going to do it. So there is that fear element involved. So, and I had another guy. I was recently in Australia as well, and I thought it was just South Africa. But there's a documentary on the ATO, the Australian Tax Office, where they're saying that tax office, with its decisions and treatment of taxpayers, is forcing SMEs to shut down. They've caused people to go to mental asylums. That's how bad it actually gets. Now, it's very difficult to measure these kind of things, but I was surprised. The ATO is one of the best employers in the country, if you look at it from an Australian perspective. So how can they be having these kind of issues? I can understand maybe in our country, but not in a developed country. But they have it too. So we didn't look at the psychological costs. We're looking at it. We're looking at the slippery slope framework that will help us to assess the difference between the power and trust of a revenue authority and what impact that has on the taxpayers and their compliance costs. Now, how do we measure these things? Well, there's various different ways. There's standard cost method. I'm not going to go into that. We basically take what is the number of hours that it takes you to get all your tax stuff. And we try to split it from accounting, because a lot of the people keep the accounting costs and the tax costs, and that's not right. So we try and split it out. So we get the hours that they spend on compliance, the costs that they incur to pay the advisor, to pay all these other things, even the time that you take standing in a queue. Some people have to take leave to go and stand in a queue to try and sort out their tax affairs and don't even get it right in that stage. For external costs, we use the actual cost. That's quite easy. And same with the incidental costs. We just take the actual costs. So what were our findings? Now, we've just started an individual survey. It hasn't been done before in South Africa. And look, this is not new. A lot of countries, and I think even some of your countries, have had these compliance cost studies. But we haven't done it before in South Africa. But for individuals, we've just recently busy with the data. It seems to be at this stage that they are quite high, which is very concerning. But the biggest finding for me is the small businesses. We found that these costs are high and they are regressive. Also, what we found of this, because remember, we said some of these small business incentives that our government brought in were specifically to help taxpayers reduce their compliance costs. For instance, we've got for micro businesses a thing called the turnover tax. And the aim of the turnover tax was so that it is simple enough that you don't have to keep records and you don't have to pay a tax practitioner. You don't need an external advisor. And that never happened. It is so complex just to see whether or not you should be on the system that you cannot, a hairdresser, a mechanic, cannot decide that by themselves. So that didn't work. And they definitely didn't save costs. So what we found with these incentives, the scary thing is most of these small businesses weren't even aware of them. I mean, that's crazy. And those that were aware of them, we asked them, well, why don't you use them? Well, they said, we're not eligible. So the eligibility criteria was also very restrictive. And those that were eligible, that didn't use it, said, we asked, but you are eligible, why are you not using it? They said, it's too difficult to understand. It's too complex. It takes too much effort for the benefits that I'm actually getting, which is scary in itself. And what they also said, it increases our compliance costs. So it goes completely against what these whole incentives were, the purpose behind these whole incentives were. Medium and large businesses, I have actually looked at them. I'm not allowed to give the results. I signed an oath of secrecy with our revenue service, but we have since engaged with them, and they are going to try and assist us to rerun the survey, to do it again with taking all the reforms into account. Another thing that came out clear in all of these surveys is that complexity of the tax legislation is a huge problem. But it's not just the tax legislation that is complex, it's the operational procedures behind the tax legislation. And that's the issue. So if we look at this over here, what are the recommendations that come out of our research? How do we address these compliance costs? Well, first of all, we've got to improve education and outreach. We've got to get to these small businesses. You're marketing these small business regimes wrongly. They don't know about them. Why? What is happening? Another problem is the competency of the SARS staff. Our Revenue Authority staff, us as tax practitioners, we are required to, we are regulated. We cannot advise somebody or give anybody assistance if we do not perform certain CPD compulsory development hours. They don't have any of that. So they are not forced to upskill themselves. If we don't upskill ourselves, we lose our job. We can't carry on. So we want equality in that room. They also need particular training. We have to make e-filing easy and introduce an app with zero fees. The banks are doing it. Why can't our revenue service do it? The data fees are ridiculous. From a policy perspective, we need to perform these tax compliance costs regularly, and we've got to measure the impact of these reforms on the tax compliance costs, and we've got to do regulatory impact assessments on all new regulations. Make sure what are the compliance costs that this new legislation is going to result in. So future research, there's a lot of it. We've got to carry on doing these studies. We've got to determine the best education and outreach practices. And this is, for me, so important. And I think all of you, Dr. Khan mentioned it this morning, all of you have mentioned it, is this collaboration. And I like on your website, on the IGC website, there's a thing calling it collaborating for impact. Now, our Revenue Authority has been very against it. So it's wonderful to hear all of you saying, let's collaborate. And I was asking, why is South Africa not here? Because they need to hear this stuff. It's the only way we can work together to make it better. So that needs to happen. We need to look at our concessions. You can't implement something and not check if it's working. And we've got to simplify our operational procedures. If the law is simple, that's great. But that doesn't mean that it's easy to comply with. So the operational side, and I think a lot of people overlook the actual day-to-day operations. Now, on the complexity side, my time is running out, so I'm going to be quite quick. We looked at, there's two ways to look at the complexity of the legislation. The layout and length of the legislation, which is quite easy, and then the readability. Now, to measure the readability of the legislation, we use the Gunning-Fogged Index. I'm not going to go into a lot of detail there. It basically estimates the years of formal education a person needs to understand the text on their first reading. Now, a Gunning Index of 12 will mean that that person it's a wide audience can read it. If you want everybody, all taxpayers to read it, you need to have an index of less than 8. Okay, 1 minute. So I'm going to look at an example, but just bear this in mind before I get to the example. If you have a FOG index of 12, that means that legislation requires a reading level of a United States high school senior, so a person of around about the age of 18. So what we did was we looked at, and I haven't gone into the small business stuff yet, I just took something that was quite simple, which is our medical tax credits, which every single individual, nearly, is entitled to claim as a rebate. We used the whole Gunning-Fogged Index. I'm not going to go into that. And what we found is that it came out with a rate of 21.67. Now, if you consider 17 is the reading level of college graduate student. And if you go back and look at what is the educational level of our SMEs, the SME owners, it's nowhere near that. So we have a bit of a problem. Okay, it is complex. The basic, and this is not even looking at, corporate rules. We're not looking at transfer pricing. We're not looking at any of that stuff. This is a simple rebate for an individual on their medical payments. Okay, so future research, all the stuff, as I said before, but what we also need to do is review the complexity of our legislation. But I want to end off by saying, again, simplicity is important, but it's not just simplicity in the law. It's simplicity in the operational procedures as well, the day-to-day operational procedures. And that's where our revenue authorities have to make it easier for our staff. And I think revenue authorities need to realize that you're going to have to give up something to get something in return. And specifically in the SME sector, try and improve, make it easier for the compliant people to comply and spend your money rather than doing random audits, etc., on the people. Try and pick up the non-compliance. That's where the attention should be focused, but make it easier for everybody else to comply. And ending off, I think, as Judith Friedman once said, she said, stability and predictability is more important than these special reliefs for small businesses. And I stick to that. I think simplicity and certainty and predictability is really important for the sector. It's a very difficult sector to control. It's not the same. We can't get one solution. So just make it easier and focus on enforcement. And I think compliance class research has to happen. I'm seeing large businesses really struggling with this. They never complained before, but it's now being pushed by them that this is now becoming unacceptable. Country-by-country reporting, transfer pricing rules. So it's not just the small business sector suffering anymore. It's everyone, and particularly for me, the medium businesses. Thank you.
Thank you very much, Sharon. The message there is make it simple. Let me call upon Kiflu to make the next presentation. Just to briefly introduce him, Kiflu is an Associate Research Fellow at Ethiopian Development Research Institute, and his research focus is on international trade, international macroeconomics, and taxation, and currently is working on business tax-related projects in Ethiopia. He holds a PhD in economics from the University of Stockholm. Kiflu.
Thank you, Dennis, for the introduction, and thanks the organizers for inviting me for this interesting conference, for giving me the chance. So my name is Kiflu, and I'll be presenting on tax evasion and missing imports, evidence from transaction-level data from Ethiopia. And this is a joint work with Andralam from Ethiopian Development Research Institute and Julia from Institute of Development Studies. This is a work in progress, and I will appreciate any kind of comments and suggestions. Okay. So as the speakers before me indicated, developing countries raise less revenue as percentage of their GDP compared to their developed counterparts. And this is mainly because of a large share of informal sector or weak tax administration and low tax morale. And on the other hand, tax revenue is badly needed for the development efforts of these countries. And this implies that there is a need to raise taxes without distorting the economy. And for this, revenue authorities need to work a lot in terms of closing loopholes and avoiding tax evasions and avoidance. And this also helps in terms of avoiding overtaxing the already complying taxpayers. So the situation in Ethiopia is not different. Actually, Ethiopia's tax to GDP ratio is particularly low, even compared to other developing countries. And it also relies a lot on the taxation of international trade. Low tax capacity and significant need for investment, it implies that there is a need for increasing tax administration or improving tax administration. And it's also important to optimize the tax rate in order to understand or in order to make taxpayers to comply. And optimizing that tax rate requires understanding the relationship between tax rate and tax evasion. We should understand whether by increasing tax rates, can we be able to raise more revenue, or will it lead at less proportional increase in tax revenue? And this kind of estimates will be important to understand the impact of tax reduction on tax revenue. So our main research question is there a relationship between tax rate and tax evasion? And just to give you a highlight, we find there is a positive relationship between tax rate and tax evasion. When we increase the tax rate, it doesn't necessarily lead to a proportional increase in the amount of tax that we collect. Some of it is compensated by an increase in tax evasion. And we also try to make contribution to the literature in terms of methodology by using panel data, which currently the literature mostly uses cross-sectional analysis. And for this, we also used the introduction of a 10% surtax rate in Ethiopia around 2007. And this gives us a better or a more precise estimate of the effect of tax rate on tax evasion. We also use transaction level trade data in order to get a more precise or a more accurate measure of tax evasion in international trade. And we also use this transaction level data to get a better measure of the effective tax rate that's applied to imports. And we also used the exchange rate regime in Ethiopia to see the relationship between, to understand the role of foreign currency rationing on the relationship between tax rate and tax evasion. So to give you a highlight about the literature in the area, the seminal paper by Allingham and Sandmo on tax evasion, it doesn't have a clear prediction on the impact of tax rate on tax evasion. And there is not much done empirically to estimate the effect of tax rate on tax evasion. And this is mainly because of the difficulty in measuring and observing tax evasion. But in the case of international trade, it is possible to some extent to measure tax evasion. And this is thanks to the availability of records of trade, both by exporting and importing countries. Using this, we can calculate the gap in imports as reported by the exporting country and imports as reported by the importing countries. So this gap can give us a measure of the evasion gap. And the seminal work that's also closely related to our work is done by Fishman and Wei for China, using imports to China from Hong Kong. And they show that tax evasion takes place through underreporting of prices, the underinvoicing, and underreporting of quantities, and misclassification of products. And the assumption in this is that exporters are more likely to report the actual amount of their exports because exports are usually not taxed. But on the other hand, importers are more likely to report a smaller amount of their imports because imports in countries like Ethiopia are highly taxed. And this gap between what exporters report and what importers report gives us a gap. Part of this is due to evasion, and part of this is due to differences in the type of reporting done by exporters and importers. So by using this kind of regression model, we can identify the effect of tax rate on tax evasion. So in terms of data, we use data from the UN SCOM trade database to get data on trade flows of imports and exports to Ethiopia. And we picked 10 relatively more developed countries that are also less likely to be corrupt in terms of giving fake invoices on their exports. And by using this data, we have generated a value gap or a trade gap to measure the evasion as a log difference in value of exports from the partner countries and value of imports from as reported from Ethiopia. And we also get data on import tax from the Ethiopian Customs Revenue Authority. We have two alternative measures of tax rate. The first is a statutory tax rate that sequentially adds the duty rate, the excise rate, the VAT rate, and the surtax rate. This is the tax rate that importers are expected to pay. It doesn't take into account the exemptions that is given to different types of importers. The other and our preferable measure of tax rate is the actual or effective tax rate, which is calculated based on by dividing the total tax each importer pays on each product by the value of the imports of these products. And this is our preferred measure of the tax rate. And as you can see, there is similarity between the two rates, but the actual or effective tax rate is smaller as it takes into account exemptions that is given to importers. And when we get into the results, first, when we use the statutory tax rate, we do not find any relationship between tax rate and the tax evasion. But when we use the actual tax rate that importers pay on their imports, we found that there is a positive relationship between tax rate and tax evasion, meaning as you increase your tax rate, then there will be an increase in tax evasion. So you will not get the benefit of increasing the tax revenue by increasing tax rates. And this result holds even when we consider years, just 1 year before the introduction of the 10% surtax rate and 1 year after the introduction of the surtax rate, using a first difference model, and we get the same result. And when we do our estimation using cross-sectional data across years, we observe that the relationship between tax rate and tax evasion declines over time, and it might be because of the improved capacity of tax administration of the Ethiopian Customs Revenue Authority. And the other thing that we have tried to look is the role of product characteristics in influencing the relationship between tax rate and tax evasion. The idea here is that product characteristics can make evasion more or less difficult. For example, differentiated products have standard prices and also are of different variety and quality. So it will make it easier to evade taxes. On the other hand, homogeneous products have standard international prices and are of less variety, so it will be more difficult to evade taxes. And the literature in this regard, the work by Javorsik and Narciso, indicate that most of the evasion takes place on the differentiated products. And our results also indicate the same direction, but the difference in the relationship between tax rate and tax evasion is not significantly different between homogeneous and differentiated products. And evasion also takes place through mislabeling of products as some similar but low taxed products. And in order to estimate this kind of evasion, we calculated average and median tax rate of similar products. And we find that there is suggestive evidence that importers evade taxes not only by underreporting of price or quantity, but by disguising the product as some other similar product that is less taxed. And in terms of the role of exchange rate rationing, whenever there is foreign currency shortage in the country, the National Bank of Ethiopia rations foreign currency, implying that importers have to wait for long to get a letter of credit, and they will get less amount of foreign currency to do their imports. And to get around this problem, what importers do is that they request a letter of credit for a smaller amount of import than they intend to import. And they will fill the gap by buying foreign currency from the parallel market exchange. And this will have two counteracting impacts on the relationship between tax rate and tax evasion. First, since they report lower value of importers, it might lead to a higher evasion. But on the other hand, it might also lead to less evasion because at times of foreign currency shortage, if you get a letter of credit, it implies that you are making a lot of profit. So it might make you report more honestly than before. And our results suggest that at times of foreign currency shortage, importers tend to report more honestly because they are already making a lot of profit by getting the letter of credit. And we also tried to adjust our measure of evasion gap or trade gap by taking into account trade costs. And this didn't change the results much, implying that the assumption which says that trade cost and tax rate are not related is valid. And just to conclude, evasion of import taxes is positively related to the tax rate, meaning that a 1 percentage point increase in the tax rate is associated with about 1% increase in the evasion gap, in the log difference of the evasion gap. So it implies that lowering import taxes doesn't necessarily lead to a similar or a proportional decrease in tax revenue. Some of the loss in revenue will be compensated by a decrease in the evasion. And we also said that evasion takes place through mislabeling of products as well. And as a further work, we'll be aiming to estimate the amount of evasion that takes place in international trade. And we also try to see the extent of evasion by product groups to show which products are more likely to get involved with evasion. And that's all. Thank you.
All right. My question was on the solution which were offered on unemployment with regards to promoting SME products. So these are considered to be domestic products, of course. So the challenge is with many trade agreements, free trade agreements that countries have entered in, which promote free trade, free international trade from country to country. Now, how do you compensate creating demand for local products against the foreign products which come in the country, or which have an effect of crowding out effect by foreign products against the local products?
My name is Musa. I represent small-scale miners from Rofanyama. My question goes to Madam Sharon. Here in Zambia, there's approximately 1 billion which is being transacted by the small-scale miners. And we have a situation where we do not have the capital. So basically, the authority has introduced a remit system where you declare new returns. So we declare new returns even if you have sold your either emeralds or diamonds. So basically, the authority is at a loss. When they introduced the new return, they did not consult the SMEs. So basically, how do we merge the two? That's my question.
That's how are you? Okay. For those who don't understand our local language, but I think I'll direct my question to Sharon, and my question is basically touching on the issue to do with outreach, education. I think with me that ZRI, I think they're here also to learn just like we are here also. That's one thing I've seen, because they're also even asking questions. But also, I think the other thing, what is important to note, Sharon maybe should shed more light on how in SA, the tax education is done. Because for me, I was trying to check how they do the education in terms of tax in South Africa. They start when someone is still a child. In Zambia, sometimes we are talking about issues of tax, and yet people maybe at primary level don't actually know anything. So at the time we talk to someone who's at the market and we're talking about like issues of the receipts you're talking about, someone has no interest over it. He doesn't even have any plan. Sometimes you go to this black market, there are no receipts. So maybe shed more light on how this education is done so that as we talk about these issues, we know what we are actually referring to. Thank you.
Thanks for the presentations. I have a question for Kiflu about the missing imports. I was wondering whether for the sample of countries you're studying, those 10 trading partner countries, you were able to compute an order of magnitude of the total gap and the total revenue consequences in this exercise. Thank you.
Regarding the sample of countries, we have picked 10 developed countries that are less corrupt, meaning that they are less likely to issue fake invoices on the exports. And the standard practice in the literature is to use one partner country that exports to you and then use that gap in the reporting of the exporter and the importer. In our case, we have picked 10 countries. And we are not aiming to calculate with this regulation, we are not aiming to calculate the total revenue that's lost. We are just trying to understand the relationship between evasion and tax rates. But our further effort will be to calculate the evasion that's taking place, and also identifying products and product groups that are more likely to be involved in the evasion.
Okay, thank you very much for the questions. I'm going to start with the last one first, and the other two I'm going to get up and walk there to actually find out I've got the first one. I think the second one I'm still a bit unclear about. Thank you very much for that last question. It's something that is close to my heart as well, and that is on education of taxation. At the moment, we're actually working with the OECD. We're looking at tax literacy. What is the tax literacy? They've started off with the individuals, what is their levels, and we're now moving on to the SMEs because they've already passed the individual stage. So on the individual stage, my aim, and I don't know if anyone can see me, but I'm pushing for that at the end of matric, I don't know what you call it here, grade 12 or whatever, before you go into university, every single student should be able to complete their return on e-filing. What I found is a lot of the kids, they're technologically savvy. The older people are scared of e-filing. They don't know how it works. But if every child leaves knowing how to do e-filing, that fear element is out. And they can actually just submit their returns and they know how to do it. So we're trying to bring it into the education system, and it has to start at school. And I'm not talking high school, I'm talking primary school. So primary school, we need to start, and it's not happening as much as I'd like it to happen. It's happening in the private schools. It's not happening in all the government schools. But I do give credit to our South African Revenue Service. I met with a lady there that is doing the outreach to schools. She's doing a phenomenal job. But the stats are that she gets to that same school once every 3 years. So there's a 3-year gap where those kids in that school know nothing about tax. And I'm not saying you don't need to know how to calculate tax. You need to know why you're paying tax, how you pay it, etc. We also have a political agenda, unfortunately, where some people don't want them to know about these things. So it's difficult for us to get it into the government school syllabus. But it's starting to get there. We're working with the OECD now to try and enforce it. Our revenue authority is trying very hard, and they've got a great team working on it, but it is resource constrained. And that's where, again, for me, it's this digital age. We need to start using digital technology to get this message out. And it's not complex to teach taxation, particularly for individuals, and we need to start when they're young. For the SMEs that have missed out on that tax training when they're young, again, there's lots of outreach happening there from SARS, our revenue authority side. But again, I looked at our entrepreneurial degrees at most of our countries. The one that we're trying to bring in, and which is way too late, we should have been doing it long ago, they didn't even bring tax in. Now, how can you run a business if you don't know how to do tax? So it has to be in all the degrees. And for me, it should be a compulsory subject no matter what you're studying. Doctors, dentists, lawyers, engineers, whatever you're studying, teachers. It needs to be in the syllabus. It should be one of those subjects that is a requirement, a core. And that's the only way that we're going to get this to work properly. So thank you for that question. And there's lots that can be done on that. And it doesn't have to cost a lot of money. And I think that's a big thing that we need to realize is we need to use technology to do this. So if the teachers don't know, give them a video that you can show the students and the teachers on how to do it. But it's not that complex to fix. And we should be looking at it a lot closer. Okay. The first question about free trade, I just want to check that I understand, and I'm going to come there just so I can actually see, because, sorry, I couldn't hear from where I was sitting. The gentleman, the first question, there we go. So I just want to check that I had the right question, understand what the question is, that your free trade, how do you ensure free trade? We're opening up the free trade, but how do you give preference to your local products compared to the foreign products? So I went first on the first one. I didn't get the second one, so I'll get to you now. Thanks.
My question was with regards to the solution you presented with regards to unemployment.
Yes.
You had mentioned that there's need to promote SMEs products.
Yes.
I consider those to be local products in South Africa, of course.
That's correct.
Now, considering the fact that we have free trade agreements, which allows coming in of foreign products, which bring in a crowding out effect against the local products. So how do you compensate that
to promote local products?
Look, I'll always go for promoting local products first. Unfortunately, that's just the way everybody, I think, should be doing it. Local products should get preference unless the quality or whatever is bad. So I would support giving local products preference first. We need to start looking after our people, and then once that's done, we can go help other people. Is it? And like I said, unless it's against, if the price is really that bad and we can't stop it, and if the quality is not good, of course, obviously.
There are WTO protocols that do not allow preferential treatment of local producers if they are competitors coming from outside.
But that's why I said I don't think preferential treatment needs to be there. I just think that they need to be given the opportunity which they have. So it's not preferential treatment. It's just they have the access to the market. They have tax incentives.
If you're a SADC member, for instance, you are not going to give preferential treatment to your producers if there are other SADC members who are competing for the same market. Thank you.
Okay, I'm not going into the customs side, but from a tax perspective, there's incentives for small businesses, and we have internal problems, and that's where that comment actually came from, is because of our apartheid legacy. So we have black businesses that are not being able to sell their products against the white businesses. So what they brought in with the preferential treatment there is for the black business owners. So it's got nothing to do with the foreign trade. It's mainly for our local businesses. Yes, he brought in foreign trade. But again, I mean, we can only give our local businesses preference, and I'm talking about the tax perspective and also from our history. That's where those come in, and that's where the preference will be given to those businesses in terms of the BE Code of Conduct, not in terms of the WTO. So I'm not talking about customs, I'm not talking about any preferential treatment. It's just from our local supplier side is forcing our companies in South Africa to use SME suppliers to get the BE rating. So I don't know if it goes against WTO. I actually never even thought of that. But they are forcing businesses to support black-owned suppliers, black-owned products. And that will, and I suppose that goes for the rest of Africa as well, but it's specifically South African businesses in that case. But yeah, the customs and all that free trade stuff, that I don't know.
Basically, mine is the authority. They've introduced a system which is working against them, where you can declare a new return even if you've made money.
You can declare a return?
Yes, new return.
Yeah. A new return?
Yes, like you can declare like you've not made any money,
yeah,
but yet you've made money.
Well, the argument is just, I think the argument is just that small-scale miners have a tendency to not report the taxes that they're making to a large extent because they're not getting any support from government, and there's basically no support, or there's no incentive for them to do so.
Yeah, and that's one thing that we need to look at is rather incentivize than punish. And at the moment, that incentive, and that's why I say going back to the taxpayer morale, one of these things and looking at the bigger tax system is what is the taxpayer getting in return for the money that they're spending? And at the moment in South Africa, they're not getting it, and we're seeing compliances going down. So if you don't get anything back or your money is not being used the way it should be used, it is going to affect tax compliance.